Welcome to our channel. Today, we're focusing on a major financial development that has garnered significant attention from investors and policymakers. The decision by Saudi Arabia and Japan to reduce their investments in US Treasury bonds. This move is far more than just a financial adjustment. It reflects a strategic shift that could have substantial consequences for global economic relations and the international financial system. For decades, US Treasury securities, particularly Treasury bonds, have been considered among the safest investments globally. These bonds represent loans made to the US government, backed by its full faith and credit. The US economy, being the largest in the world, has maintained a strong track record of honoring its debt obligations, making US Treasuries a reliable safe haven for investors during periods of uncertainty or market volatility. Japan and Saudi Arabia have long been two of the largest holders of US Treasury bonds. Japan, as one of the world's largest and most advanced economies, has traditionally viewed these bonds as a stable way to manage its significant foreign exchange reserves. By investing in US Treasuries, Japan has been able to diversify its investment portfolio, ensure liquidity, and stabilize its currency in global markets. Similarly, Saudi Arabia, with its vast oil revenues, has used US Treasury bonds to safeguard its financial reserves. This approach has allowed the kingdom to hedge against oil price fluctuations, ensuring economic stability and liquidity. US Treasuries have provided Saudi Arabia with a secure and easily tradable asset, helping to manage the nation's considerable wealth in global markets. However, the decision by both nations to scale back their holdings of US Treasury securities is indicative of deeper economic shifts. A major factor influencing this move is the ongoing transformation in the global economy. Traditional economic powers like the United States and Europe are facing mounting challenges, while emerging economies, particularly China, are asserting their influence. China's rise as a global economic force is reshaping trade, finance, and investment patterns, leading countries like Japan and Saudi Arabia to reassess their financial strategies. China's increasing economic strength, exemplified by initiatives such as the Belt and Road Initiative, has expanded its reach in global trade and finance. This shift has prompted countries to diversify their portfolios and reduce their reliance on US-based assets. Additionally, the growing geopolitical rivalry between major global powers has created an environment of uncertainty, influencing financial decision-making. Tensions between the US and China, concerns about energy security, and ongoing military competition in various regions are prompting nations to reevaluate their investment strategies. Technological advancements are also playing a key role in reshaping financial markets. The rise of artificial intelligence, blockchain technology, and fintech innovations are creating new investment opportunities, which are shifting attention away from traditional safe haven assets like US Treasury bonds. As the global financial landscape evolves, countries are seeking investments that align with emerging technologies and future economic growth. The COVID-19 pandemic has further complicated the global economic environment. In response to the pandemic, the US government significantly increased its spending, resulting in record levels of government debt. While these fiscal measures were necessary to stabilize the economy, they have raised concerns about the long-term sustainability of US debt. As the national debt continues to climb, fears of inflation and the devaluation of US Treasury bonds have emerged. This growing debt burden, combined with potential inflationary pressures, may be causing nations like Japan and Saudi Arabia to reduce their exposure to US securities. With rising debt and economic uncertainty, Japan and Saudi Arabia's decision to reduce their US Treasury holdings could be due to reassessing the risks of these investments. Japan may be concerned about the long-term stability of US economic policies and how they affect its own financial strategy. Japan could be aiming to diversify its investments and reduce its reliance on US debt as it navigates a challenging global economy. Similarly, Saudi Arabia's decision might be part of a larger plan to adjust its financial reserves in response to changing economic and geopolitical conditions. This decision has broader implications beyond short-term financial impacts. It suggests a shift in how major global players manage their money and prepare for unexpected events. As Japan and Saudi Arabia adjust their investment strategies, they could influence global investment patterns and financial markets. Understanding this change requires a deep look at the evolving global economy and how countries are adapting to new challenges and opportunities. Recently, Japan chose to reduce its investments in US Treasuries. Several reasons can explain this move. Japan is facing significant economic challenges, such as an aging population, which has strained the country's budget and slowed its economic growth. With fewer births and more elderly people, the social support system is under pressure. On top of that, Japan has been dealing with deflation, where prices stay low and economic activity slows, discouraging investment and consumer spending. In response, Japan seems to be shifting away from foreign investments, including US Treasuries, to address its own needs. It might be reallocating funds from US bonds to boost its domestic economy by investing in public projects that create jobs and improve services, or expanding welfare programs to support the aging population and encourage spending. This could also be part of a strategy to make Japan's economy more resilient by investing in sectors that will foster long-term growth and stability. Japan's decision is also influenced by its evolving relationship with the US. Historically, the two countries have been close economic and strategic partners. However, recent trade tensions and economic disagreements may have prompted Japan to diversify its investments, reducing its reliance on US assets and managing potential risks from future conflicts. This strategy aligns with Japan's broader goal of playing a stronger role in regional economic partnerships, such as the Regional Comprehensive Economic Partnership, RCEP, and the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP. By reallocating its investments, Japan could be positioning itself to influence the growth and integration of the Asia-Pacific region. Saudi Arabia's decision to reduce its US Treasury holdings is also driven by a mix of economic and geopolitical factors. As the world's largest oil exporter, Saudi Arabia's economy is heavily dependent on oil prices, which can be volatile. In response, Saudi Arabia launched Vision 2030, a strategy aimed at diversifying its economy and reducing its dependence on oil revenues. By selling part of its US Treasury holdings, Saudi Arabia might be freeing up capital to invest in domestic development projects that support Vision 2030's goals. These investments include infrastructure, tourism, and non-oil industries to create new economic opportunities and reduce reliance on oil. Saudi Arabia's decision to reduce its US Treasury holdings could show a desire for more independence and a shift in its foreign policy. Even though the US-Saudi alliance has been strong, there have been recent tensions over issues like energy policy, regional conflicts, and human rights. By cutting its US debt holdings, Saudi Arabia might be signaling that it wants a more independent foreign policy and is looking to strengthen ties with other global powers like China and Russia. This could be part of a broader plan to expand its international partnerships and increase its influence worldwide. Saudi Arabia and Japan's recent decisions to sell US Treasury securities could significantly affect the US economy. One major concern is interest rates. The return investors get from US government bonds, called Treasury yields, depends on supply and demand. When big holders like Saudi Arabia and Japan sell off a lot of Treasury bonds, the supply in the market increases, which can lower bond prices. When bond prices drop, yields or interest rates go up. Higher yields can raise borrowing costs for the US government, as well as for businesses and consumers, leading to more expensive loans and mortgages. This could result in reduced consumer spending and delayed business investments. The sale of US Treasuries could also impact the value of the US dollar. Demand for US assets like Treasury bonds helps keep the dollar strong. If major holders sell off their Treasury bonds, demand for US assets may decline, weakening the dollar. A weaker dollar could increase inflation by making imports more expensive, but it could also help US exporters by making American goods cheaper and more competitive internationally. Furthermore, selling US Treasuries could shake global investor confidence. US Treasuries are considered one of the safest investments, backed by the US government's reputation. However, if large investors like Saudi Arabia and Japan pull out, it could raise doubts about the safety and stability of US debt, leading to closer scrutiny of US economic policies and its global credit standing. There are also broader geopolitical implications. Saudi Arabia and Japan selling US Treasuries could reflect shifting global power structures and alliances. These countries may be looking to reduce their reliance on the US and strengthen ties with other major powers, especially in Asia and the Middle East. For Japan, this could be part of a strategy to boost its economic independence and influence in the Asia-Pacific region, where it has been building closer ties with countries like Australia, China, and India. By reducing its dependence on US Treasuries, Japan might be aiming to position itself as a more independent global player. Similarly, Saudi Arabia's move might signal a shift toward a more multipolar foreign policy. By seeking stronger connections with other global powers, Saudi Arabia may be trying to diversify its international partnerships and reduce its dependence on the US. This could be part of a larger plan to enhance its strategic position in the Middle East and adapt to changing global dynamics. Overall, the sale of US Treasuries by these major investors could have far-reaching effects on the US economy, as well as on global geopolitics and the world economy. The consequences could impact international relations, investor confidence, interest rates, and currency values. Saudi Arabia is working hard to strengthen its diplomatic ties with China and Russia, two countries that are becoming more important in the Middle East. It's also reducing its investments in US Treasury securities, which signals a shift in its approach. While Saudi Arabia has long been a close ally of the United States, it now seems to be looking for a balance in its international partnerships. Moving away from US debt and toward China and Russia shows that Saudi Arabia wants to broaden its diplomatic and economic relationships, rather than relying mainly on its strong ties with the US. The decision by both Saudi Arabia and Japan to sell off their US Treasury bonds could boost their geopolitical influence and give them more financial flexibility. US Treasuries are among the safest investments in the world, so selling them might provide these nations with more immediate cash and the ability to explore other financial opportunities. However, this move comes with risks. Large changes in demand for US Treasuries could lead to global market instability, since they are a key part of the global financial system. If Saudi Arabia and Japan sell off significant amounts, it could create uncertainty and disrupt these markets. Furthermore, selling US Treasuries could strain their relationships with the United States. The US government might see this as a sign of decreasing confidence in its economy or financial stability. In response, the US might adopt policies that could impact investment flows, trade agreements, and diplomatic ties, leading to more tension in various areas of international cooperation. On top of these risks, both Japan and Saudi Arabia might face challenges in finding alternative assets for their reserves. US Treasuries are known for their stability and security, so it won't be easy to find other investments with similar qualities. Given today's uncertain global economic climate, finding reliable alternatives to US Treasuries will be difficult. Both countries will need to carefully evaluate their options to keep their financial reserves secure and stable. Thank you for taking the time to watch this. If you found this analysis of Saudi Arabia's and Japan's decisions to reduce their US Treasury holdings interesting, please share your thoughts in the comments below. Your feedback helps us improve and bring you more engaging content. And don't forget to subscribe to stay updated on the latest economic trends and global financial news. Thanks for your support.